across an article that seems to be hitting the news and social media. It's called "Minority Neighborhoods Pay Higher Car Insurance Premiums Than White Areas for the Same Risk." And I recently did a video about this with a similar article with State Farm, where they're getting sued for a similar situation. This is a very long read. I'll put the link in the description below so you guys can check it out. But it's from a company called ProPublica. They're claiming that a minority, black male, is paying 4 times as much as a white male in a completely different zip code. This is in Illinois. I had to play some defenses here because I wanted to understand, like, okay, is this really a discrimination against minorities? And is it an old system that's causing this? Is it a new system? And what's the reality? I'm actually going to show you some interesting information that I found based on some research that I did on this article. So what I did is I read the article as much as my mind could handle, which is you get down to the halfway point and you're just like, oh my gosh, there's so much information. And it gets into graphs and charts and talks about different scenarios. They get into some pretty heavy stuff. They're talking about Allstate, they're talking about Nationwide, they're talking about Geico Insurance, and all of these major companies. They're seeing that there's another company that's doing research on the zip codes, because if you don't know, insurance is based on territories. In the state I'm in Michigan, that's what they are. They're territories. They're lumped zip codes because the state has kind of not fixed this issue, but because in Detroit, for us, high risk, right? And that tends to be a lot more minorities, but also 30 to 40% of all of that area is uninsured. Kind of rightfully so, because the price to buy insurance there is $6,000 to $10,000, where if you go a few miles outside of Detroit, or you get closer to like Grand Rapids or Lansing or whatever the state is those areas are a third of that. They're $2,000 to $3,000 a year on average, so half the price. And there's reason being, obviously, because in that area there's a lot of uninsured motorists, so the risk is extremely high. But in Illinois, similar to what is happening, they do zip codes. This is what Michigan used to do. And those zip codes are kind of not micro, they're kind of a medium risk look. And we'll talk about the micro part I just mentioned, because there's some pretty cool things Allstate's actually working on. But it's essentially the minorities are getting anywhere from a 10 on average, 10% higher, to a 30% higher insurance rate. Same person, same zip code, same scenario according to the study. I called BS. And I didn't believe the article because I just can't fathom that that's even a thing, because the way the insurance industry works, it's all algorithms, it's all numbers, it's all facts. It's like, at least it might be a shock in my world if it's not, because they want to make money. And the best way to make money is to determine where your highest risk is, raise the prices. In most cases, the higher companies raise the prices so they don't want to buy it anyways, because they're only looking for that perfect scenario. The more perfect scenarios, perfect driver profile you can fit into a company, the more money you're going to make, right? You're going to make a premium, but then there's the value that you're paying for that, right? So there's a lot of things that my BS warning went off. And so here's what I did. I said, you know what? Let's check it out. Let's go to Geico, who is the named company in this person. So the guy here is a 34-year-old, one of the guys, and a 26-year-old. So I was like, okay, let's find out. Let's just go even, because we're comparing a 26-year-old to a 34-year-old. There is instantly a risk difference. If you read all the way down to the article, darn near the end, they do talk about what I'm talking about right now, which is that there could be profile risks that aren't talked about. Not once do they talk about claims, at least that I read, and correct me if I'm wrong in the comment below. Not once did I see them talk about insurance score, which I get it. Most people don't like the fact that that's a thing. But if you're in more of a minority area, odds are your insurance score is way worse. Mine's not good, so I pay more, right? It sucks. I get it. I'm part of that group. And then you have the other zip code. So I looked up houses in both zip codes. We had the two zip codes, which the one that they were talking about was in the zip code of 60624 in Illinois. And then the more prominent person was in the zip code of 60657. So profile one, which is paying $190 per month for a policy where this guy's paying 50 something for an Audi versus a Civic. Seems ridiculous. The 50 something dollars sounds ridiculous as well. I don't know how that rate got as low. So what I did is I took my information, I looked up addresses in both of those zip codes. By the way, totally different neighborhoods. You can definitely tell. The first one wasn't actually that bad, but the second one is your $1 million houses, $1 million row homes and all of that. Like, it's expensive. That's where they're saying the risk, like it shouldn't change the risk based on that, because they're saying more claims averages are out of this higher neighborhood because of the higher value, higher claims, higher payouts, versus the higher risk supposedly is not having those higher payouts. Anyways, I plugged those into Geico. Here's what I found. If I put my right birthday in, I put my right information in, I left everything exactly the same. I did okay coverages. I did a 100, 300 uninsured motorist the same. I did 500 deductible comp, 500 deductible collision on both of them. I made sure they were identical. The only difference was the zip code. If I defaulted to what Geico said right off the start, which was PLPD, it was $154 a month for just basic coverage in that area. If I added the coverages like I just mentioned, the full coverage and the towing, and I had rental car coverage and all that stuff, the stuff I would normally want to carry, it's $247.58. So he's actually paying less than I would pay. That kind of sucks that for the insurance. And granted, that's Geico, my profile in Geico, so I might not be a fit for them. Later in the article, he found a better deal. That doesn't take into consideration, I didn't want to take the time to put my spouse in there, so he's married, he's got a spouse. That's probably going to help some of the risk because you have a secondary driver to pull the risk away from. He does rent, so you're talking about renter versus probably a homeowner. The cost over here for the same full coverage, the default was $163, so $9 difference to be in the better neighborhood, and the full coverage cost was $226.14. So we're talking, was it $226, $21 more to be in the higher risk zone based on the article. Now, I'm not saying that the article is false because there's a lot of data, and I'm not going to fight that. There's a lot of good information, and if companies are being discriminatory based on the zip codes, that's a problem. We need to fix that. The part that I don't like about when these articles come out, a lot of them are geared towards getting you to review them, getting you to watch them and be like, oh my gosh, this is so horrible. And I get it. There's a lot of crap that the insurance industry gets. I'm as angry as you guys are, right? This is a channel to help you. The part is, one, if you take the exact same person, so we're taking a 24-year-old versus a 34-year-old and playing them off of each other. We're taking an Audi versus a 2012 Honda Civic, and I found the almost exact models that they had. When we're taking those things, those scenarios, we're talking about a homeowner, probably a really good insurance score. I don't know, they didn't say it, right? Probably a fairly okay insurance score, better than mine because mine was more expensive. So in that scenario, this is not fair. Like, you can't say that that's the scenario because insurance score, location does matter in most cases. The type of vehicle, what's the odds of that vehicle being stolen? The area, right? That's the zip code. But how often is a Honda Civic stolen? I think that's one of, or the most stolen vehicle in the U.S. Okay, that's a small problem. How often is an Audi stolen? Not very often, not compared to the other, right? How often is the medical claim? So maybe it's a little bit higher here. So there's a plus and a minus. Are they doing multi-policy, home and auto? I don't know if he's doing renters and auto. That's probably why his was cheaper. He probably is, which is good. That's going to save you some money. That's not to say that's a one-off. That's just me doing, I just had to know for myself, exact company, exact locations, picking the exact person, same data. I don't see where this article is holding true to be that correct. You can't sue me on that because it's just my information. I plugged it in exactly the same. Other parts that the article does go into, so you guys can determine if you're going to read the article. So it's not just Geico. They're talking that even Allstate is on average, even though the average is 10%, not one company out of 34 companies they checked, 33 were 10% or more. One of them was 9. And the worst one was unfortunately Allstate. They were averaging about 30% more expensive in the white versus black neighborhoods. So minorities versus non. Not to say that there's not white people in a neighborhood, because they're just saying that's primarily the type of neighborhood that you're in. I really like to debunk some of these because obviously they're playing off of us reading the article, but I kind of see what they're showing. There's a chart here, and I'll show it on the screen, that clearly there's a big difference in the cost. The cool thing that I wanted to mention is I want to give some shout out to Allstate, who's actually working on, in this article, that they are doing micro interest. So they're trying and testing out not just zip codes, they're doing sub zip codes like blocks. So what's the risk in this specific area? That's really detailed. And that can, and hopefully can, break up some of this systems that a lot of it was probably built back when that maybe was a thing. Maybe it was designed to higher risk for minorities. We don't know. Like there's probably no way we'll know this. I agree with this article, and I wish that they would make it transparent to where insurance companies have to share their rates, but they don't have to share the claims per zip code. They have to share the claims that they have to show financials, but they don't have to show what area is risky. It kind of makes you wonder if that's the case. Is they're doing that because they don't want to share that is unfair, and that's just maybe a system they're trying to fix. But in that scenario, it shouldn't be happening. Okay, so there's the named companies are the big guys. We've got Nationwide, like I said, they said they're about 10%. Mainly in Illinois, they said Texas and California are also some big areas that they've done the research in, and they're having some issues there. They've checked several hundred insurers, so they're checking the data across a whole wide array of places and people. But now, again, it's kind of like someone saying Bitcoin got hacked, and then all of a sudden the price of Bitcoin went down, right? This is a big claim with some pretty looks like legit data. But when I checked it, it's not accurate. So I'd love to get a response if ProPublica's examination system or whatever they'd love to, have somebody speak the part. I'd love to hear it. It makes you think. Now, I'm not saying I'm right or wrong. I'm just telling you what I know. I'm not saying, and I kind of see what they're saying here because there's a lot of data to back that up. I'd love to see it. And I'd love the insurance companies to also, who are never going to respond to this, they clearly are not going to start that argument and let it continue. If it's an issue, it needs to be fixed. Based on my research, the one quote that I did in those two zip codes, based on this exact article, they weren't conclusive. If you guys are interested, if you are part of ProPublica's and you want to leave a comment, I'd love to pin it. Your response would be awesome. Otherwise, let me know what your guys' thoughts are. Do you think that this is a common thing? Keep in mind, that's a big fight, right? Profile of the person, credit, insurance score, type of car, theft on the car, odds of claims, the area that you live in, all of that stuff creates your premium, which clearly mine was higher than this guy's. Not necessarily higher or much higher in different zip codes, at least in my one scenario here. Is that something that these insurance companies should release? Is it data that we should all be able to see to hold them accountable? Now, they are regulated by the government, so it does go through the government, and they actually are investigating this. So they are taking this data, and whether I'm right or wrong, or whether these guys are right or wrong, it's going to be noticed. It's either going to be processed and said, they're doing it, got to fix it, or it's not, and they're going to say they're clear and good the way that they're going. The more and more I see that these companies are doing it, is they are leaning away from the zip codes, because a lot of people don't like that. The zip code thing, even though there's a lot of merit, so to speak, at least on the insurance end, and the government and the DIFs, Department of Financial Services, and all of those guys have shown proof that different zip codes are different risks. Makes sense. But do you think maybe we should all go to the way that Allstate's doing it? Go to micro. This home has this type of risk, or this location has this type of risk, or do we wipe it all clean? And the ones that are paying the lower prices have to raise up a little bit. This is what happened in Michigan. This is what part of the reason. The zip codes that are tied in those territories, the ones that were paying lower had to be lumped into them. So they went up a little bit. The ones that were higher came down a little bit. And we all sort of shared the cost on a wider scale. I'd love to know your thoughts. If you guys are interested in checking out some rates for different companies, I'll put a link in the description below. There's a company that I work with that shops multiple companies, up to 30 different companies. Let me know what your thoughts are. I'm Mark with Think Insurance. I'll see you in the next one.